Right, hello everyone. If you're here, can you just drop a note, say hi, and we know we can get going. Right, awesome. Thank you very much. Right, hi Dunkel, hi Sui Heng, hi Josephine. Great to have you here again. All right, hi Yel. You're finally joining us from Facebook and not YouTube. All right, nice to have you, Yel. All right, Wayne, thank you. All right, Mei Ling, hi. Stanley, hi. Aulun. Okay, hi Herbert. Okay, now, so without further ado, let's get going. Okay, if all of you can help me click the share button on the video, all right, that would be awesome over here. And first up, let me apologize for last week. The boohoo last week was really down to a clash with the live mentorship sessions that I was having. All right, we started off at 8:30. I was due to finish it by 10:15. We couldn't finish it. All right, so I had to send out information to put this session off. All right, I apologize for that, but I'm back this week. Now, so same drill again. There will be new entrants who are joining us for these Friday sessions. If you have not done so, could you just go to the post where you see this Facebook live video? There will be a link called www.streamyard.com/Facebook. All right, just click on it and then you'll see a blue button which says approve Facebook for use. All right, and that will allow us to see who's leaving comments. All right, otherwise you're just going to appear this. All right, like this that you see on the screen, all right, whenever you type something to me, all right? Now, thank you very much. Okay, now, so we have a couple of you. I won't be able to know who you are unless I run a separate window, all right? Now, thank you very much, Sarah. I can see you, so don't worry at all, Sarah. All right, we can see you. Thank you very much. Hi, Katie. Okay, hi, everyone, and let's get officially started. So our portfolios are pretty light, all right? We have like 3 positions on top of a portfolio hedge. Okay, so that's all we have currently right now. Okay, we are looking to add, okay, we're looking to add because yes, I still do have a Nokia position over here. But my Nokia positions are in shares, they're assigned to me, but they're not expensive investments. They're like $1,500 for just 300 shares. Okay, now, so once again, before I start the session, I need to let all of you know, all right, it is my responsibility to put it out to all of you, all right, that investments do have its own risk, and any form of investments will bear risk of loss. So if you are listening in, please treat everything I'm sharing as, coming in from an educational purpose angle, all right, to share information with you and some potential investment opportunities that I will be taking on my own. All right, so this is pretty much just a sharing session. And if you do, decide to take on any trades into your own live accounts, please make sure that you have done your own risk assessments before doing so. Yeah. Okay. I hope that's clear and that's out of the way. And yes, let us get started. So in these Friday sessions, okay, we are doing it for the general public. Okay, I know many of you who are joining me right now come from my mentorship program, come from investment community. All right, so please understand when I run these sessions, I'm talking about option selling from a pure public perspective. All right, so to be an option seller and to do it in a very, very safe manner, okay, and still generate some great income for your investment portfolio, okay, is to do what we call portfolio puts. Now, what are portfolio puts? It's actually having a very simple concept. All doing this instead of deciding to buy a stock. Okay, so which means, right, whatever stock you're trading must have the same fundamental perspective, the same fundamental background as why you would actually buy the stock, and more so why you actually buy the stock right now at this current price. Okay, so it all starts from there. Okay, but from there, instead of actually coughing up the money to buy the shares immediately, okay, what we're doing instead is we're going out there to the markets, hunting down a put option, okay, and selling these put options to collect the premiums. Okay, if you're not familiar, the premiums are what we get when we sell these options. Okay, they are not called option price, they're called option premiums. Okay, so that's what we get paid. So similar like an insurance company. So as long as nothing happens to the stock, we will be perfectly fine. We get to collect those premiums. Nobody makes a claim, right? That's our profits at the end of the day. Yeah, okay. But if the stock do drop, okay, if the stock does drop, okay, and it goes below the strike price of the put option that we have sold, okay, hence come our responsibility. So much like an insurance policy, right, our customers are going to initiate a claim against us, right? So what's their claim then? Okay, their claim is simply to make us buy their stocks. Okay, so when you sell put options, your biggest responsibility is to actually buy the stocks of your counterparty. That's actually why you get paid. Yeah, okay, now, so as long as you decide the strike price of the put option, right, to be one, okay, to be one where you're actually willing to buy the stock at, then essentially there's no problems at all, right? Just all you're doing is, instead of buying the stock right now, okay, and it may not go up, which means you may not make money at all. Okay, all I'm trying to do is to pocket those premiums as a cash flow, as an income, right? Instead of trying to wish and hope that the stock will go up, right? That's it, right? It's a very simple plan over here, but yet, having done so, okay, it will still be able to produce a double-digit return on a per annum basis, right? On the low side, it will still hit 10%, but on the high side, we can even hit up to 30% per annum, right? So it all depends on how you structure it, right? And what kind of opportunities come your way, right? And that's simple, okay? Now, so the safest way of doing it is actually this, right? To put up all the amounts that you need, right? In case of an accident. Okay, so if you don't understand what I'm saying over here, is this, right? Our obligation is to buy the stock. So no matter how many options you sell, right? Every option controls 100 shares, right? So if you sell 3 put options, which is what I do, right? All you need to do is to make sure you have the capital in your account to buy the same 300 shares. Okay, because if you have the capital, then you will never run out of money, right? So at worst case scenario, all you have become is a long-term stock investor. That's it. Okay, but remember our course, okay, the stocks are stocks that we're willing to buy in the first place. And we're willing to buy them at the current price. That's why we're thinking of doing the trade right now. All right, everyone? Okay, now, so this is just a refresher of our aim, our goals, and our perspective of Friday sessions and our strategies. Okay, now, so more people have joined us right now. So if you have not done so, please do me a favor. All right, click the share button, click the like buttons, help me on the Facebook algorithms, all right, to let more people see this video over here, right, which I'm trying to do and commit to every single Friday. All right, now, so let's get going. So the usual over here, what I'm going to do is I'm going to go through the markets, right? Those of you who have joined me in these sessions, you know what I do, okay, is I try to start off with a market summary. Okay, and I've got something interesting, everyone. Okay, I've got something interesting. So if you think your friends can benefit from these market updates and market insights as well, right, where the threat lies, where the benefit lies, okay, please make sure you click the share button. And instead of just leaving it blank, what you want to do is you might want to just leave a message at the top, right? Great market summary coverage, right? Things you should know, right? So something like that that piques their interest. So it'll make them actually watch the video, all right? Because that's the only way you can benefit them, all right? I hope you'll find the information useful too. Okay, now, so I've said this in my couple of videos back over here, that what we want is this, okay? What we want is actually from the market, okay, to have it hit a peak, all right, which it did over here, all right? And then I was looking for a more severe correction all the way back towards this breakout point, okay? And then a higher high, okay? It didn't do that, all right? But what it did was this, it hit a high, all right? It went sideways for a while, all right, before we had breakout just yesterday. Right, we had a breakout to a new high yesterday, okay, and then today we are off a little bit. Right now, this would actually still make it work from a technical perspective. Yeah, all right. Yes, Sarah, you can share the link from the Telegram as well. Yeah, okay, but for us to kind of appear better on Facebook itself, all right, it will help whenever someone helps us click the share button on Facebook feed itself as well. Yeah, all right. Thank you very much, Sarah. All right, hi Doris. Okay, now so. What I was saying over here is this. We did have this higher high, everyone. Right? We did this higher high. And what's happening right now is the trend in the market has come. Right? So yes, I do know that many people are still feeling very bullish about the markets. Right? But if you are a contrarian trader like what I am, okay, now for those of you who are not familiar, a contrarian trader, right, is someone, right, who only trades at extremes. Okay, that means when the market hits an extreme top, right, I'm looking for opportunities and also signals, okay, that the market is turning the other way. Okay, and of course, the market has hit the bottom. Then I'm looking for signals that tells me it's going to rebound. Okay, so of course, we know that the market has hit the peaks. Okay, but over here, we still had no reason, right, to actually argue or to actually think about why the market would actually correct. Okay, but now we actually do. Okay, let me say why now we actually do. First, if you look at the 3 simple indicators that I had below, all right, now the first thing that you're going to see over here is this. Let me get up. Oh, I was at the wrong side. Let me get out my drawing over here. All right, now, so the first thing you're going to see is this. While we have this higher high, right, while we have this whole index going higher, right, we have the strength of this move, right, going lower, right? So in technical terms, we call this a divergence, right? A divergence simply meaning that, there are lesser strength that is pushing this market to a new high, right? So think about this way. You have a big boulder, right? Because the S&P is 500 stocks, right? So it's like a big boulder that you're trying to push up the hill right now, okay? All right, as the hill gets higher and higher, it gets steeper and steeper, right? So you need more and more momentum to actually keep pushing it higher. Okay, but the moment this momentum dies down, it tells you that the market fatigue, right, is starting to set in. Right? So when the market fatigue starts to set in, right, can you imagine, right? Yes, indeed, that's what I'm trying to say. Okay, now can you imagine, right, if the people who are still pushing this boulder upwards, okay, if they crater, if they crumble, or they just give up, yeah, right, because they're just so tired they gave up, right? What's going to happen to the boulder immediately? Yeah, okay, when it lacks the push. Yes, so that's the trend that we're seeing right now. Okay, I'm not saying it will happen, right? But clearly, right, clearly the signals have started appearing, right? That means cracks have started appearing. Yeah, okay, all right, it's no longer so coordinated, it's no longer so one-sided right now. Okay, cracks have appeared. And the best part is this, it's not only the RSI, all right, the same thing has happened with the stochastics as well, right? Because if you see the stochastics, it's also having the bearish divergence. Okay, and I tell you one thing, all right, that is, pointing me towards the direction even more, right, is this, right? We even have, right, the same bearish divergence on the MACD, right now. So for those of you who are familiar with the MACD over here, it's a very slow moving indicator. Yeah, right. It's one of those lagging indicators. We call them the laggards, right? Okay, but they do produce pretty good signals when they give it to them or give it to you, right now. And it is very rare. Okay, it's very rare to actually see a divergence happening on the MACD, right? And when they do appear, all right, they are usually more, all right, accurate than the ones that you see on the RSI and the ones that you see on the stochastics, right? But the problem right now is this: we don't have it just on one indicator. We have it on all 3 of them, right? So we have it appearing on all 3 of them. Okay, plus, right, the catalyst of the earnings season that's happening right now. Okay, we have this recipe for disaster. Right now, I'm not saying it's going to happen. I'm not saying it's going to be like a terrible one where, it's a 20-30% kind of drop. No, all right, but it's just showing you that the market is fatigued. All right, so when the market is fatigued, you can have those, 100-point drop days anytime, or 100, 200-point drop days within a week kind of stuff. All right, so that's what you need to be aware about. Okay, because when those days come by, it's a case of sell everything. Right now, what do I mean by sell everything? I'm not sure if all of you have been aware of this particular trend as well. Right? People say that cryptos right now are a hedge against the market, but it's not. All right, it's not a hedge against the market, because if you notice, when the markets do crash, okay, when it's an all-out crash, that means you have your S&P crashing, you have your Nasdaq crashing, right, and you have your Dow Jones crashing, right? But when the Nasdaq crash, all cryptos crash as well. Yeah, all right. I'm not sure if you realize that, but I've seen that happening over and over and over again. Yeah, all right. Now, so cryptos as a hedge against the market, no, it doesn't work out. It doesn't play out. Yeah, okay, all right, it's been out of sync. Yeah, okay, now in crypto, whether you like it or not, it's like a penny stock, right? So it's no different from trading a penny stock index right now, right? Because it's already hit euphoria, right? So everyone is trading on the greed factor over here and trying to push it higher. Yeah, so when we hit a fear level, right, fear hits the entire market, everyone's going to get fearful. Yeah, all right, now, so don't think that any markets will be spared, all right, once we have a day like that. So that's why I say you have to be careful. Right, not just only if you're vested in the stock market, but also if you're vested in some of these newer age, investments. Yeah, okay, so just be careful across the board when you're, opening up new trades right now. Okay, now, is it a good time to still open new trades? The answer is yes. Right now, why do I say the answer is yes? Because, right, at any point of time in the market, you must understand, right, that there will always be some bargains, right, amongst great companies that are out there. Right, it just makes it more difficult. Yeah, okay, all right. But there are bargains, which are what we call gems out there. Right. So as long as you can find them, right, you should still do it. Yeah, okay, all right. Now you should still do it because stock market is like that. Whenever you find a great opportunity, right, you should go in on it because as long as the fundamentals are strong, right, they have already been punished. Yeah, okay. So if these stocks have already been punished, even when the market's correct, one, right, the safe money, right, should go into these stocks. Yeah, right, because they are the ones that are undervalued right now, correct? Yeah, so instead of falling, these stocks can actually go up, right? And number two, if it belongs to a defensive sector, all the more they will attract this money, right, on a bad day. Yeah, okay. And number three, right, even if they go down, because they have already been pressed lower, right, the magnitude of the drops on these kind of stocks will be lower, all right, than probably what you see right now on Amazon, right, and Google's, because they've been enjoying great runs over here. Right, so I hope you understand what I'm trying to teach you from a very simple look, right, at how things work, right, and from a common sense perspective and angle. Yeah, right now. So having said that, this is the trend in the market. All right, and now let's go to what we have. Okay, first up, let's review our portfolio, and then I'll go and talk about two stocks. Yes, I'm actually adding two stocks into the portfolio. Right, after saying all that I said, yes, I'm still opening two positions. All right, Nelson. All right, let's go to your question first. All right, now, Nelson. All right, now, I'm not saying that a correction is definitely going to come. All right, but the signs are there. Yeah. All right. So as you see on the chart right now, the cracks have appeared on the indicators front. All right. So when we do get a push, it will give the technical traders reason to want to short this market or to go on the short side. Yeah. Okay. So if more selling comes in, then we've got this self-fulfilling prophecy that is going to happen over here. Yeah. All right. Okay, now, so let's go play it out. What stocks do I have? I know I have a CAH, right? So we have a CAH 5750 puts that expire on 21st of May. Let's have a look at what CAH has done. Oh, it's waffled sideways, right? So we might have some premium decays over here due to the time that has passed us by. All right, so let's have a look. All right, 21st of May. What do I have again? I have the 5750 puts, 145. Let's have a look. 5750 puts, 145. Oh, we're down. Right, we're down a little bit on this, but we've got time. We've got like 3 more weeks to go. Right, I'm not worried about it, so just leave it. All right, no management to be done. All right, next up, JD. Right, we have JD.com. Oh, this is all the way to January, so nothing to look at over here. All right, unless JD has this big jump upwards. Let's have a look. Nope, no big jumps. We have a 77.50 and the stock is 78. So nothing much to look at. No management. Right, MDLA. Let's have a look. MDLA. Oops. Oh man. Right, MDLA is now at 30. Right, 30.1. All right, which is where our strike is. So probably we won't have much over here as well. Right, so no management action, no closing actions on any of them. So we're going to leave it as it is right now. Right now, my age-old Nokia, let's see where it is. It's going up. It's inching up. Right, not too bad. Let me see something. Oh yeah, I'm going to do this right now. So what I'm going to do is this. I've got, okay, I'm just going to scroll up my Excel over here. All right, now I was assigned these stocks over here at $5 a piece. All right, so since my break-even price is $5 a piece, all right, now the 21st of May, all right, $5 call option has a premium of about 11 cents. All right, so I'm going to take advantage of that and add this call option to the stocks that I have. All right, so what I'm going to do is like I've done it once earlier in Feb, all right, when we were given the opportunity, and once more in March. Okay, I'm going to add another one over here. All right, so I'm going to add another call option sell. Okay, I own the stock. So by selling the call option, right, this strategy is called the covered calls. Yeah, okay, so once we assign on the stock, this is how we can also sell options to continue to generate income. Right, so I'm going to sell the 21st of May. Okay, it's going to be the $5 call, right? And we're going to do it today, which is the 30th of April. And I'm going to pocket 11 cents. Okay, 11 cents. Okay, so for 3 contracts that I own, okay, that's going to add $33 into my portfolio. Okay, now let's look at this trade right now. Okay, let's look at this trade overall. Now, so my cost basis of the shares, okay, that means how much do my shares cost to me right now? Okay, it's $5, okay, minus the put option premium that I collected at the beginning, which is 39 cents, okay, minus the 19 cents that I got from the first call option I sold, right, minus the 8 cents, okay, that I also got, okay, when I sold the second set of call options, okay, and minus today, right, another 11 cents that I've collected, yeah. So the cost of my shares is actually only $4.23, right? So have a look over here, everyone. Now understand this, right? Come 21st of May, right? Come 21st of May, right? Two things can happen, right? Two things can happen, yeah? Now, so what can happen over here now is this. If Nokia prices goes above $5, right? Somebody is going to take my share away from me, right? This call option owner is going to take that stocks away from me at $5. But do you realize if they take it away from me at $5, I still end up making a 77-cent profit. I didn't lose money on this trade. It was a bad trade. That's why I ended up with the stock, right? But I still end up with a profit. Yeah. Okay. See how it works now? Okay. Now, and even if nothing happens, that means the stock stays over here at 470, right? It stays here right now at 470. Okay. My cost basis of the stock is 423, right? After this set of option expires, which means I can actually go to the market. I can sell my stock at 470 if it is still then on the 21st of May, right? And I still end up with a 50-cent profit, right? So can you see actually right now, I'm already in a profitable position on this stock right now at current price. Yeah. Okay. So this position is not losing me money because a lot of times, all right, many of you actually think, all right, Terence, once we assign the stock, right, we're actually losing money. No, it's actually not, right? You just have to start calculating, right? What's your break-even cost on your shares, right? How much do they cost you right now, right? And then make a judgment from that, right? This is actually where option selling gets very interesting, right? It's much like buying a property, right? And as long as you rent it out, right, all those rent that you're collecting is actually paying down, right, the final cost of what you're actually paying for that property, correct? Yeah. So essentially, after a certain number of years, when you have rented it out successfully, that property sort of becomes free to you, right? Yeah. Think of this strategy of option selling as doing that, but with stocks. Okay, everyone? Right now, so I'm not sure if any of you learned something with what I just explained, all right, because I know many of you who are already within our community, right, but any of you who are joining me right now, okay, and never heard of this before, right, can you just share it with me in the comment section, right, that you have learned something over here, all right, that is helpful, right? If you find it helpful in the explanation, right, can you just type it in the comment section on your Facebook feed itself, right, and let me know, all right, it'd be wonderful. Otherwise, right, if, you know, all I'm saying over here is trash talk, or 废话, all right, then I will try to refrain myself, right, from doing these trash talks. All right, okay, now, so let's go. Okay, so no managements over here. Let's go to what I'm going to add today. All right, thank you very much, Facebook user. All right, so is this how I'm going to identify the newcomers over here? All right, you guys will always appear as Facebook users. All right, now, so if you guys are new over here, can you just click on the link once again on the Facebook feed, all right, which is www.streamyard.com/Facebook, right, and then approve Facebook for StreamYard use, okay, and then we'll be able to see who's leaving comments with us, okay, all right, because there's obviously two of you who's telling me it's useful, right, but we don't know who you are. All right, now, thank you very much. Okay, now, so let's go to the stocks that I want to add today. All right, where's my platform? Yes, here's my platform. All right, now, so the first stock that I want to add today, right, whether you're amazed or not, right, I bet you when I tell you this stock, many of you will be going, what? All right, what? Yeah, all right, thank you, Madam SKC, all right, from who are joining us from YouTube. All right, awesome. All right, it's pretty surprising, all right, and pretty wonderful to see comments coming in from our YouTube shares. Let's go. Oh, forgot to stop. Oh, yes. Tell me if you're surprised when I bring out this stock, okay? All right, now today I'm gonna add, all right, today I'm gonna add eBay. All right, I'm gonna add eBay. Yes, I'm gonna add eBay to my portfolio. All right, actually, it's not surprising for those of you who have joined us a long time ago. Yeah, okay, if you joined us from quite a while ago, all right, I've done this before and I'm just doing it again. Okay, now why? Because earnings have disappointed. Yes, I finally waited for that opportunity all over again. All right, okay, it was doing so well, it was flying all the way back up, all right, and now it's dropped back down. Yeah, all right, eBay, yes, eBay, yes, all right, the first e-commerce platform from 10 years ago. Yes, really. Yes, Travis, really? Yes, really. All right, yes, come, let me justify why I'm doing so, okay? Now, so first up, all right, first up, eBay. Okay, whether you like it or not, you'll be surprised to find out, right, that eBay do pay a dividend, right? Okay, so it's a company that actually pays dividend, right? And then second, all right, hit rock bottom, not necessarily, but it's cheap enough. Yeah, all right. Nelson, eBay, very old company, doesn't matter, right? Doesn't matter because all the safe companies are the old companies. Coca-Cola, Nike, yeah, all right. Okay, Nelson, as long as they're profitable, that's the most important key, right? Okay, now, so yes, eBay may not be the biggest platform that we have over here in Asia right now, but eBay is still very big when it comes to Europe and the US. Yeah, okay, so they're still making money, right? Remember that. Okay, now and look, in fact, this company has a PE ratio of 13, right? 13. Now, what business are they in? Can all of you share with me in your comment section? What business are they in? Right, and at the same time, if you know, right, share some stocks, right, who are their competitors right now. Right? Can you share their competitor stocks with me right now? Yeah, right. I'm going to show you how I do my analysis. So if you want to learn, right, the insights of how I think as an investor over here, right, you've got to help me. You've got to play along with me over here. Yeah, all right. So if you're ready to commit, I'm ready to share with you. All right, let's go. Option, not necessarily. Yes, they do it via an option over here, but I think Nelson has it a little bit more right. All right, so Nelson and Andy has it right, which is they are e-commerce companies over here. Oops, wrong one. Comments are moving too fast. All right, yes, e-commerce company. All right, awesome. Now, Hernando. All right, awesome. Great to see you in person, Hernando. At least your profile pic. All right, Pin. No, not so much Pinterest actually. Yeah, all right. Okay, Pinterest will be a little deviate from being a real competitor to them, but Chit, I think you're right. All right, I think you're right with Amazon. Yeah, all right. That's probably one of the biggest competitors. And let me show you something. Right? Can all of you just look at? All right. Thank you, Hernando. I should be the one saying thank you. Right now, so PE ratio. Can you see the PE ratio of eBay? It's 13. Right now, if all of you are not familiar, PE ratio is the stock price, right, divided by the earnings per share. Right. So the stock price per share divided by the earnings per share. So right now at this price, okay, what you're paying for is 13 times of what eBay is earning. Right now, let's have a look at Amazon over here. Yes, and that's key. All right, that's key to a fundamentally cheap pricing over here. I'll explain in a while. I know some of you are growth stock investors. Think of it in a different way. Right. So if we compare Apple to Apple, yeah, all right, Andy, thank you very much. Apple to Apple, yeah, okay, both similar companies, both in the same space, same business space. Okay, now which one sounds like a better bargain? Right? Do you want to buy Amazon, which is now right at this price, you are paying 83 times of what they earn, okay, or right, you're willing to pay, right, for another company which is also profitable, right, but it's only trading at 13 times. All right, now which sounds like a better bargain over here? All right, type your answer in the comments and let me know, everyone. All right, since this is an education segment I'm doing over here today for free, right now, let's have some interaction over here. Yeah. All right, Sarah, you said no. What do you mean by no? All right, yes. All right, now eBay. How about the others? Yes, eBay for sure. Yeah, all right, now, because when you look at PE ratios, as long as they're not negative, right, as long as the number that you're seeing is not negative, it means that the company is making money, right? It means that the company is making money, right? Now, so the lower the PE ratio, all right, the better it is actually. That means the price that you're paying for the stock right now is actually cheap, right? Now, so let's have a look at John, right, and what John said, right? So John is suggesting Baba, right? Let's go have a look at Baba then. All right, have a look, everyone. All right, John, Baba, I'm not saying Baba is a bad company, all right, but Baba has two issues right now. The first one it has, right, is falling on the wrong side, all right, of regulations. Yeah, all right, okay, it's falling on the wrong side of regulations, right? And when any company, right, gets into these kind of conflicts, right, with authorities, right, I try to stay way out, right? I try to stay way out. Plus, another fact over here is this, right? Plus another fact that this company is not paying dividends. Yeah, all right. So while I'm invested in the company, even if I own the stocks, I'm not being rewarded as an investor. Yeah, all right. So this is an issue to me, right? Number one, if I compare to apples again, all right, I'm paying 2 times, right, of the earnings, okay, when it comes to Baba, all right, okay, 2 times of the earnings when it comes to Baba, right? Amanda, no issues over here. You can bring out all you want. Shopify, right? It's the same issue. All right, look at this, 464 times PE right now. So those of you who are growth stock investors, right now, you will be arguing with me on the fact that, Terence, you cannot really use PE to value. Right now, PE is great for what we call the old companies, like some of you labeled eBay over here, and you're not wrong, right? PE ratios are great for valuing value stocks, right? From a very, very simple perspective, right? But they're obviously not very good when you're trying to value growth stocks, right? But also, let me show you some threats, okay, that PE ratio can give you when it comes to growth stocks. Okay, I'm throwing another golden nugget over here, right? Now, because of where the market is, I want to keep all of you safe, right? So, I want to bring all these kind of things to your attention, right? So if you do find that, whatever I'm sharing with you, right, are little golden nuggets, right? Okay, I really seek your help to click the share buttons, right? Leave a comment on these golden nuggets that I'm sharing with you, right? On the threats to the market, all right? Okay, if you find what I'm sharing is useful, right? Okay, now I believe that's fair, yeah. All right, okay, now, so let me show you this. If you're talking about Shopify, right, there's nothing wrong with paying 464 times earnings. There's nothing wrong with that, okay? But the threat is this, with a market that's already so overvalued, okay? That's number one, okay? And then with a stock, right, okay, I need to change this. Yes, right, with a stock, right, that has already gone up by this much, okay? And I mean, right, from 400, all right, $500 to a high of $1,500. That means 3 times, okay? 3 times. Have a look, everyone. When it was still here, okay, when it was still here, I can't find out what was the, okay, when was this date over here? Let's go have a look. Oh, yes, I know what I want to do right now. So what's the PE ratio for Shopify again? 400 times, right? 400 times. Let's have a look. So back in, this is 12th of February, 2020. So that's 1 year ago, right? Okay, 1 year ago, February 1 year ago, right? The company was making 47 cents, okay? 47 cents, okay? Now, so now, okay, now, February, so we are here, right? The company in February this year, 1 year later, right, made $1.58. Okay, $1.58. Okay, now, so that's what? 3 times of last year's earnings. Okay, agree, everyone? So they made 3 times of last year's earnings. And that's correct. What do I mean by that's correct? Because you must understand, if we had this company at a 300 times PE, all right, if this company had 300 times PE last year, right, and they tripled their earnings, it's a line. It's a line. But right now, you're paying for 400 times the earnings, okay? So you realistically have to ask yourself, by February next year, are you going to see the earnings per share of this company, right, go up by another 4-folds? Because that's what it needs to do. Because you're arguing with me that, Terence, this is a growth stock, right? So you cannot use PE to value it. But that's fine, right? If you're paying 400 times the earnings, that obviously means that you expect earnings to grow by another 4 times over. Okay, now, because if it doesn't achieve that, right, if it doesn't achieve that, and when it reports earnings next February and the numbers are lower, right, lower than this year, right, which is 158 that you're seeing right now, right, can you imagine the disappointment? All right, and with that disappointment, what do you think is going to happen to the stock price? All right, can you see the trend right now? Right, so the trend is not buying it at this current price. The trend is you need to do a lot more deeper analysis, right? right, to actually figure out, right, if Shopify, right, can actually steal 4 times the current earnings. Because why? Shopify is an e-commerce aggregator, is an e-commerce platform. Yeah, correct. They help companies list themselves online, set up websites with ease, and then start immediately, right? Now, but the issue is this: in the last 1 year, right, many conglomerates, many stores and whatever, right, that needs to bring their business online, right, have done so in haste, right, and done so in great pace, right? So now the question is, how many of them have been slow to adopt? All right, how many of them have been left? They still not done it. Yeah, okay, all right. Is it enough, or is it so big that it can still drive the profit that has already shot up 3 times, right, by another 4 more times? Okay, so you see how I look at things. All right, I don't need to look into the complicated numbers. Okay, but what I look at it is from one simple thing called the PE ratio, right, and then I make my judgment call from there. Yeah, all right. Does it sound like a great investment, or it doesn't? Yeah, okay. Now, and the same would have you saying, all right, with even a great company like Tesla, right? I don't hate Tesla, right? I really don't hate Tesla, but I have an issue with it, right? Now, the issue that I have with Tesla is this, right? If you look at it right now, all right, they have what? Record profits. Okay, now great, record profits. So we are in April this year. They made 93 cents a share, right? So let's go to April last year. This is January, right? So here, right? Can you actually see something, everyone? Can you tell me what do you see, right? Because April last year, the earnings per share is $1.24, right? But right now, this year, the earnings per share is 93 cents, right? So can all of you leave a comment and tell me what's the problem, right? When it comes to Tesla over here, all right? What's the problem? When you look at what's happening with the earnings, right, versus what's happened to the stock price, right, 1 year later now, right? Can all of you leave a comment and tell me what's the issue? All right, sorry, John, I left you up there for so long. I apologize for that. Yes, thank you very much for helping me, Facebook user. Yeah, right now. So Facebook user over here immediately spotted what I spotted. Oops. No, John. It's nothing to do with the share split. And in fact, because of the share split, and this is happening, right, it has become even worse. Yeah, all right. I'll tell you, this is a bad thing, actually. Yeah, okay. All right. This is a bad thing if you're still a Tesla investor. Yeah, okay. All right. Now, so strange valuation. All right. Anyone else? All right. I'm going to give it a couple more seconds because I really want to bring it. I want to see your response because I want to get you thinking, right? So that when I tell you my idea and how I read this information, right, it will actually be very useful for you, right? And just by listening today, you would have picked up a big learning point. Yeah. Okay. And if you know any friends who are Tesla investor, right, bring them to this video. They need to hear this. Okay, they need to hear this. Yeah. Okay. I'm not bashing Tesla. All right. I have nothing against it. Yeah. Okay. But I just need to bring to you the attention, right, that some threats you need to be aware of. Okay. You need to be aware of if you're sticking, right, and you're what we call a diehard Elon Musk fan. Yeah. Okay. No, KT, it has nothing to do with exposure with Bitcoin. Yeah. All right. Now. Okay. Now. So let's go. Okay. Now. So some of you are saying, things. Yes. All right. Now. So valuations are overhyped. Number one, if you can look at this right now, Tesla has a PE ratio of 1,000%. Right, 1,000%. But can you tell me from earnings last year to this year, what happened? Did it go up or did it go down? Right? Did earnings go up or did it go down? Yeah, that's the problem right now. If all of you realize, right now, with this 1,000% PE, right, does the company look like it's growing at 1,000%? Right? Do you feel that the company is growing at 1,000%? Right? Based on the hard numbers that you're seeing. Yeah, all right. Based on the hard numbers that you're seeing, does it look like a company that's growing at 1,000%? Because that's what people are paying for it right now. Yeah, okay. And right, the next problem is this: what is their main business? Right, ignoring all the Bitcoins, ignoring all the hyperloops or whatever. Right, because even when those succeed, right, Elon Musk may actually put it under a different company altogether. It may not be belonging, right, to Tesla itself, because Tesla is listed as an EV company. Right, you must understand that. Right, it's an EV company. Yeah, right now. So the question right now is, with a 1000% PE, does this company look like it's performing and meeting the mark? It's not. It's not. Right? And John brought out a very interesting point. He said the stock split, right? And that's even worse, because do you know why? All right. Yes, a stock split means that there are more shares, right? Okay, but okay, if a company was confident, all right, if a company was confident with how much they're earning, right, and they're capable of keeping the earnings up, right, that's why they split the stock. All right, that's why they split the stock. Right now, why do I say this? Because, right, one of the most successful stock split, all right, stock splitter, all right, was Bill Gates. All right, he split Microsoft 10 times, right, over the last 20 years, right? And every time he split the stock, Microsoft stock price went back to the original price. So can you imagine, right? At 100, he split it to one stock into two, so it became 50, right? But from 50, it went back to 100. Right? Can you imagine this scenario happening 10 times? Right? 10 times. All right. And of course, him being the owner of the company, how many shares does he have? So after splitting 10 times, he had 10 times more shares. And the stock price returned to the original price each time. All right. Okay. Now, and the reason why it happened, was this. Every time he split the shares, the share float increased, but the earnings per share reported still went up. That's the difference. Yeah, okay, if you want to put it on the fact that, oh, there are more shares, so of course my earnings per share is dropping, then why do you even split? Because you split, right? Isn't that because you want more people to be able to afford your stocks? Yeah, okay, but your company is not meeting up the mark. So that's like, some signals to me that, hey, it doesn't look right. At the current valuations, at 1000% PE, at a split and your earnings is dropping, all right, and you're claiming record profits and your earnings is dropping, right? And of course, plus, right, what we're seeing with the EV markets right now, right? Okay, the Ford Mustang E's, yeah, all right, and then all these, what GM has just invested one of the heaviest plant to make electric cars. Yeah, okay, these are traditional car manufacturers. Yeah, okay, if they really start to put resources, right, to creating electric vehicles, right, do you think they need a long time to catch up? They don't, right? They don't really, right? It's whether they want to put their efforts into entering the market, right? And once they do, right, whether they're successful or not, you must understand this, right? It's going to bite, right, a little of what Tesla has. Yeah, okay, like all we know right now, right? Like, for example, Toyota makes the most reliable cars, but not everyone buys Toyota. Yes, the majority of the market buys Toyota, right? But there are people who want the premium items, yeah, right? The premium models, the premium mix. There are people who want the performance mix. There are people who want the luxury mix, and then there are the people who want the cheaper mix, right? You see the problem right now. The competitiveness is just too high. Yeah. Okay. Now, so all this just stems out from PE ratio. I'm sorry I deviated from it, right? But I hope all of you learned something over here. All right, so if you find that what I've shared today is a golden nugget for you, all right, you could type the golden nugget, right, or leave an emoji over there. I don't know if there's a golden nugget emoji actually. All right, I'm done. I've deviated too long. All right, let me go back to my trade. All right, eBay. All right, eBay. Okay, so what I'm going to do today, all right, is I'm going to add the 18th of June. All right, I'm going to add the 18th of June, everyone. All right, 18th of June. All right, thank you, Herbert. All right, thank you, Travis. All right, so all of you agree, right? If you learn something, then you need to help me click the share button and the like button. Shameless, yeah. All right, now, so 18th of June, I'm going to sell the 55 puts over here, everyone. All right, 55 puts. All right, so I'm going to gun for 156. I'm not negotiating too hard, 156. All right, so I'm going to go with my typical size, which is 300 shares or 3 put options. Okay, 3 put options. Okay, so I'm just going to put it on my account right now and to get it filled so all of you can verify that this is a live trade I've done, right, in this session over here. Oh, it's changed. I could gun for 158 right now. I'm just going in the middle of the bid and ask. Now, by doing this trade, it also means that I'm actually very comfortable. Oh, it's jumping. Oh, I got filled. Oh my goodness. But it's okay. Right now, it also means that I'm signaling to all of you that I'm comfortable owning eBay stocks, right, at $55. Right? That's why I'm choosing this put option. Okay, and let me show all of you first, okay, that this portfolio is done. I've sold 3 eBay put options, right, for 55 put June 18, right, at $1.60. Right? I submitted it for 158, but because the price jumped, right, so the market gave me 160. Right? That's all good. Right? So I sold 3 at 160 over here, is done. Okay, now, so let's go ahead and fill this on our portfolio and see what it does now. All right, so this 47, and let's go to 48 now. Yay. Right, 18 June, 55. I'm doing it right now, 30th. Right, 160. Right now, so what's the ROI on this trade? I'm making 160 on investment of $55. So this trade will bring me 2.91%. Now, this option has 49 days to expiry. All right, so is that 8 weeks? All right, let me calculate it right. Is that 8 weeks? I'm not too sure actually. Oh my goodness. 7 weeks, right? Yep, that's 7 weeks. Right now, so 7 weeks. So all I'm going to do is I'm going to divide that ROI by 7 weeks and then remultiply it by 52 to annualize this return. Right, and for this trade, I'm clocking in at 21% ROI on a per annum basis. So can you see I said that our range was between 10 to 30, right? And actually, effectively, I'm aiming for 20% when I'm putting up a portfolio put option. Yeah, okay, so if I'm building a portfolio on selling portfolio puts, my target is at 20%, right? Because I'm putting out all the cash to actually buy the stock, right? So, and even with that, okay, and simple guides like this, I'm hitting 20% per annum. I think it's pretty good, right? Definitely better than money in the bank, yeah? Right now, so compounding a portfolio at 20% per annum isn't too difficult after all. But of course, you know, if all of you are looking to generate much more or start off with a smaller capital, right, then, you know, do consider one of our mentorship programs, okay, by being an option seller in a more professional way, all right, and, you know, knowing exactly how you do things, right, and of course, without any risk of needing to own any of these shares that I'm showing you right now. Okay, so our portfolio can start from as little as $1,000 to $2,000 if you know how to sell options, okay, as one of our community members or as one of our trading members. Yeah. Okay, so send my team an email if you're interested to find out more. Okay, but I will not talk more about it in this session right now. So eBay, that's the first position I'm taking. Now, second position, let me see if it's still valid right now. Okay, don't worry, I'm not going to analyze this on my own. I'll do it with all of you. Right, another stock that I'm interested in taking a position on my portfolio is MO. Right, MO. Right, Altria. Right, Altria. Now, so for those of you who are not familiar with Altria, right, let me tell you a little bit more about this company. Right, Hernando, for this portfolio, yes, naked puts, but it is what we call a portfolio put, Hernando, right, because I have prepared the cash, right, required to buy the stock. Okay, required to buy the stock. Okay, now if you look at this trade over here, right, I've put up $16,500, right, to do this trade. Okay, now this portfolio that I run on Fridays, okay, is on an official portfolio of $100,000 capital, right? So this is a $100,000 portfolio. Okay, all right. So as of right now, to do this trade, I'm ready to buy 300 shares of eBay at $55. Right. So this trade will eat up 16,500 of my capital. Right, 16,500 of my capital. Okay, and then all right, now, if it doesn't drop below 55, Hernando, right, the option will actually just expire. Yeah, okay, so there's no need for me to buy the stock. Right, I'll just end up walking away with the profits from the premiums I collected. Yeah, okay, all right, now, so let's go back to my MO trade. Right now, so why MO over here? It is a tobacco business. It has suffered for quite a while, right? And then we have the earnings dip over here, right? So all of you can see it was finally breaking out, right? It was struggling over here for the longest time ever, and then it broke out from $44, right? So it broke out from $44, and right now it hit a peak of 55, right? And after earnings, yeah, okay, it wasn't half that bad, the earnings, Yeah, you can see earnings are improving right now. Yeah, okay, so didn't like it. It caused it to drop. Okay, and today it's about rebounding about $1 over here. We have it at 47.40, right? 47.40 right now. So what I'm going to do over here is I'm going to aim to sell the 45 put option. Okay, 45 put option. Yeah, okay, and I'm going to collect about 86 cents, which is down the middle again. Okay, down the middle. I've always liked Altria. Altria is a stock that I've always monitored for, in fact, the last 10 years, right? So when it suffered because it went ahead to make a big investment in marijuana, yeah, okay, which obviously didn't work out as well as they planned, okay, and also e-cigarettes, which obviously caused a lot of legal issues, all right? So the stock price have been impacted due to these two bad investments. Right, but that presents a great opportunity because Altria isn't a stranger, right? You must understand they are not a stranger when it comes right to these problems, right? They are tobacco business to begin with, yeah, right? They know what they're doing, right? They know what they're doing, yeah. Okay, so if they are investing into this, they are well prepared of all these hiccups that can happen over here, right? So I'm going to take 3 contracts over here. 45 puts, 80, let's go 86. All right, 86 June. All right, done. All right, there you go. All right, MO June 45 puts, so 3 of them at 86. Yeah, okay, so these are all trades, which means they're filled. All right, timestamp 23 minutes, which is right now, okay, on the clock. Okay, why is it 22 hours? I'm not sure. Yeah, I'm really not sure. This is just the platform's timing. All right, as you can see, the clock over here shows the same time. Yeah, okay, all right, now, yes, Ryan, that's why the stock was impacted. Yeah, okay, that's all been played out over here. If you see me bring it back to a daily chart, there you go. This was the Biden ban. Yeah, okay. Right, so this was the Biden ban over here. All right, so we had it plunge and then earnings came out. The stock barely did anything. So right now it's in the consolidation phase again. Yeah, all right, so we can see the stock consolidating in this channel. Right, which is here. Right, to here. All right, which is 45 to 48. Okay, 45 to 48. Yeah. Right. Yes, Hernando, you got it right. So Altria is a great dividend-paying company, right? So it provides a lot of stability over here. Yeah, right. A lot of stability over here. Yeah. Now, so yep. So I'm gonna add this to my portfolio, and I've done so as well. So let's go and calculate the ROIs on this trade. Yeah, and once again, let me put it out as a disclaimer. It doesn't mean that any or all of you will actually have to do all the same trades, right? You need to do your own risk assessments, risk judgments before going ahead, right, and deciding you're comfortable with these trades. Yeah. Why am I trading 45? Yeah. Yes, 45. 30th April, I'm collecting 86 cents. Right. So this return isn't going to be as pretty as the last one. Yeah. Okay. Because I'm collecting much lesser. All right. So let's see what kind of ROI it brings to me. Ah, wrong. Right, 1.91, right? So it brings me about 14% over here, right? Not the best, but it's still decent, right? Considering the great company and the opportunity I have, right? So this trade brings me 14%, and it'll cost me 13,000 on my portfolio over here, right? So I'm pretty vested actually, right? I'm pretty vested. Oh, I forgot to delete this because I've closed that. I've opened up the new one. So right now I'm vested at about 79,000. Right, okay, so my portfolio is opened with positions right now up to 79,000, 80% exposed, right? So whether you like it or not, I'm still confident with my portfolio, right? And I'm not keeping all that much cash. Yeah, okay, I'm not keeping all that much cash. Yeah, okay, because I do think that all these stocks that I have open positions on, right, they will remain stable, they will remain strong, okay, but in the event anything happens, I'll just pick them up and did exactly what I did with Nokia that you saw me explain earlier. Right, everyone? Thank you very much for your time with me. Yeah, it is option expiry Friday, and finally we have a dip in the markets, right, to end the week. All right, some volatility kicking in. All right, so let's see what else we have in store. Right, the day may end really uglily over here if selling momentum kicks in, people get scared. Right, real selling may kick in. All right, but let's have a look. Yeah, all right, nothing. We all don't know what's going to happen until the end because the bulls are still ever ready to buy this market up. So any sign of positivity, they're going to come back roaring. Now, thank you very much. I hope it's been a great learning point for all of you this Friday. Right, consider that as a makeup for missing last week's session. Right, and please, all right, remember, if you have not helped me share this video or click the like button, do so before this session ends. For those of you who are joining us again, yeah, all right, Andy, awesome. AMD and GILD, you made money. Right, awesome. All right, great. Thank you for letting me know, Andy. Okay, now, so I'll see all of you next Friday, once again, at Portfolio Building with Terence, yeah? All right, same time, same channel. Yes, which is Facebook. I'll see all of you next Friday. Bye-bye, everyone. Thank you. All right, thank you very much. Bye-bye. Thanks, Ryan. All right, thanks, Sarah. See you. Bye-bye. All right, yes, Hernando, see you on Monday. Bye-bye.